if someone is in a situation where, let's say, in the next 12 months, they're really looking to do some borrowing for whatever reason, investing, PPRs, like their equipment, plant, who knows, right? Everyone's needs are unique. But if I'm looking at this and I'm going, well, my opinion, and this is just my opinion, is rates are going to go up, inflation is just going to keep happening. I look at what I would have to potentially earn to keep up my borrowing power based on what you've mentioned before. Is this something where people may, and I'll say maybe because this is not personalized advice, but they should really consider borrowing more quickly and getting ahead of it now versus doing it, let's say in this example, 12 months from now?
Absolutely. This is the perfect time to be talking about this. Obviously, yesterday's already done, so today is the best day to talk about it. There is a sense that property prices are going down. We aren't seeing it everywhere. It's probably a gross generalization, but in the same breath, we're also seeing borrowing power go down, as we've outlined. So even if, let's take a major city, if the property prices go down by 2.5% per month, and our borrowing capacity drops by 9% every time the rate goes up, even though we could get a cheaper house, we probably can't borrow the money anymore. So that's if you're looking at opportunistic investing there. If you're going down the path of how can you get the money right now, I've got many examples of customers that we have got their loans formally approved, loan documents issued, everything's great, and then they slightly change their goal. They want more money, they want to go interest only, they want to change something in it. And if we actually changed it after it's been approved, it would be assessed with another rate rise. They won't be able to get the same money they got before. And even though they have to pay the new interest rate, which is what happens, the interest rate doesn't affect you until settlement, they still won't get the money. And if it's a purchase and a contractual obligation and they tell us to go change it, we could interrupt the loan flow. And we don't want to act in, we want to keep contracts in play, not have them fall over. So you've got to be careful. What you can borrow last month, this month, is going to be different in the future. And what the banks do, they all treat this ruling differently. So if I submit a loan today, it doesn't mean that the assessment rate that I'm assessed on is going to be today. Some banks will keep the assessment rates, and there's probably another question that you guys ask me. They'll keep the amount of money they have at the time of putting an application in. Or some of them don't allow, they will reassess it at new rates up until it's been approved, up until it's been conditionally approved, up until it's been pre-approved. Some may even want to check your credit files and assessments before settlement. So we've got to, in my firm, we've got to monitor and track all that so that we're not going to put our clients at risk if something's going to fall over like contract or something like that. But the answer is, if you don't borrow now and the rate goes up, you're going to have less money.
It's interesting because I actually think that you and I ran through this, Aaron, in a previous place that we bought for me, where it was just like, and a rate rise, and a rate rise. And I'm like, oh man. But it was great. It was just like, yep, cool, no problems. And I'm sure you had to deal with all the paperwork on the other side. Mm-hmm. So looking at this kind of environment that we're in, like obviously there's all this tightening on lending where people's borrowing capacity is decreasing, interest rates are going up. I probably tend to agree with Charlie, where this is my personal opinion. I do think that interest rates are going to go up and inflation is going to stay sort of where it is at the moment. Like, how do you see, because you've got this unique advantage where you live and breathe this every single day and you are in the weeds. It's almost like this insider secrets on it. Like, how do you think all of this environment of high interest rates and tighter lending is going to impact things on like the bigger picture?
Well, as we said, we're decreasing. If our income stay the same, I think we're going to see borrowing power will fall down. But I think we're seeing in the market people getting hungry for things. I'm seeing a lot of business owners and just increase their incomes. As I'm starting to see 2022 tax returns, they have even more income than they've had for the previous year. And some of these are long-term clients of mine, and you can see if I pulled it out and track the trend, their income's going up. So some of that is going to overcome any of the future rate rises and changes in living and inflation and all that stuff for people to keep going. I did a little spot check in the office with what was happening with the brokers and where are the purchases and where are the refinances. So in an upwards interest rate cycle, and the doom and gloom might go, oh, we've got to restructure, we've got to reset loan terms, and we've got to decrease interest rates and all that other stuff. We're just going to do refinances, buckle down the hatches, close it all in, go in the bomb shelter and see what happens at the other end.
Well,
but we're actually seeing...
That is the exact conversation I had with Bianca. It was like, doomsday plan, let's get this in play.
You're in the bomb shelter, aren't you, Charlie?
I'm recording from the bomb shelter right now.
Yeah. And we found that was a 50-50 mix. Across the brokers, it was 50% purchases, 50% refinances at this point in time. And it's amazing how many people are actually wanting to purchase right now.
Dude, that was the interesting part of the conversation with my buyer's agent as well. Is like investor demand is still incredibly strong. I must admit, I kind of thought I was talking with him at a time where there's probably not as many buyers. It might be a great time to be a buyer. Turns out there's still a lot of buyers out there. It seems that in this environment, it hasn't turned people off as much as I thought it would. So interesting insight there, Aaron. Is that what you actually expected? Do you expect this to continue? Is there any signs of it slowing down? Like from a borrowing position right now, like are there any indicators you're looking at that would have you, I suppose, view things differently or change your opinion here?
Well, a couple of things to reveal. We've increased staff levels to accommodate demand in my firm. I do breathe and live borrowing every day. So the product that I sell is debt. So that's the mechanism that I breathe in and out every day and I specialize in. So I haven't seen a drop in demand. I've seen an increase. And I suppose the only warning of that is that if I've increased staff, you build it, they'll come. So if you take the business aspect versus the market aspect, I've built up. So I'm seeing a lot more demand because I've got more people, more faces everywhere, more faces out there. So it's a bit hard to put a measure just for me on the market because there's a bucket load of loans that goes through the system. I think up to December 2021, I think there was over $60 billion of loans changed around in 3 months. So if I'm not doing 60 billion in a quarter, which I'd love to do, the market effect is probably not going to affect me. But I think there is some buyer apathy. And what I mean by that, the buyers are trying to hold on for a drop in the price. They're getting a bit advantageous, trying to get ahead of themselves. And they're not really understanding, if you look under the hood of the borrowing capacity, is that what you can borrow today, you can't borrow in the future. So even if the price goes down of the house, you might have $100,000 gap to make up. Versus locking it in at the $1 million, for example, getting the rental income off it if it's an investment, or having a place to stay if it was the ideal place for you to stay with the backyard and the kids and all that idealistic stuff. But you wait and the price goes down, you get a good bargain potentially, but you can't borrow the money you did before.
Hey, fellow business owner, if this topic and value-packed short video has resonated with you at all, and you want to dive deeper into being a full stack business owner, check out the full episode by clicking the link on your screen or in the description right now.